Group Statements, Chapter 5, Intragroup Transactions, Inventories. P Limited, representing the parent company, and S Limited, representing the subsidiary company, are regarded as separate reporting entities, and transactions are reported in the separate financial statements of each entity. However, transactions between P Limited and S Limited would not be reported in the consolidated financial statements, as they are regarded to be transactions within one reporting entity, and not transactions with a third party. Consolidated PS, or the group, would report only transactions with third parties outside the group. This principle is referred to as the entity concept. Therefore, IFRS 10 consolidated financial statements requires that all intergroup balances, transactions, income and expenses be eliminated in full. Therefore, when you have intragroup sale of inventories, inventories sold by S Limited to P Limited should be sold by P Limited to a third party before the sale can be recognized in the consolidated financial statements. This is equally true whether P sells to S or whether S sells to P. The concept remains: if there's intragroup sale of inventories between P and S, the sale can only be recorded in the consolidated financial statements when the buying entity sold the inventories to a party outside the group. The flow of economic events usually involves the following. You have one entity in the group, in this example S, that purchases inventories from a third-party supplier at a specific cost price. Then S sells the inventories to the parent, and this constitutes your intragroup transaction inside the blue block. That is intragroup. Then P adds on some more gross profit and sells the inventories to a party outside the group at a selling price. The end result of this transaction that is allowed to be recognized in the consolidated financial statements is the inventories at the cost price paid to the third-party supplier and the sale sold to a third party at this selling price. Only once this step has happened, where the parent sold the inventories to a party outside of the group, can this sales transaction be recognized for group purposes. If that step has not yet happened, and the transaction, for instance, stopped there, the sales transaction cannot yet be recognized as the group has not yet sold the inventories to a party outside the group. And that is the topic of Chapter 5, where we're going to look at how to make sure that my consolidated financial statements includes the sale only once it's sold to a party outside the group. The effect of having intragroup sale of inventories on the consolidation process is that all intragroup balances and the effects of transactions between the parent and the subsidiary, where we now have a resultant profit or loss, has to eliminate. So in this scenario where we have parent selling inventories to the subsidiary or the subsidiary selling inventories to the parent, the effect is the elimination of intragroup balances and transactions. And this is now the first scenario where we're going to look at an intragroup elimination journal where it would have an effect on the profit of the group. When we are busy with the consolidation process, it is important to remember that the totals and balances recognized in the separate financial statements of both the parent and the subsidiary represent my starting point for the consolidation process. That is the separate TBs. Before you can understand the consolidation journal entries and consolidation adjustments from Chapter 5, you have to make sure that you are able to recognize inventory purchases, inventory sales in the separate financial statements, so that you can understand what is the transactions that both the parent and the subsidiary recognized in their separate financial statements. After you now combine these balances and totals and add them together, they have to be adjusted for the effect of any consolidation journal entries. And the focus of Chapter 5 is again on the consolidation journal entries when you have an intragroup sale of inventories.